The broadcast is now starting. All attendees are in listen-only mode.
Okay, good evening, everybody. How everybody's doing? This is Neil Green again with you on the weekly webinar, just like every Tuesday at 6 p.m. GMT time. Welcome. I would like to welcome you guys joining us from GoToWebinar and welcome all our traders joining us from Facebook.com. And as you probably know, some of you, if you don't know, we're here every Tuesday talking about the events that are taking place at the same week. Last time we did some technical trading, trends trading, and so on. And today, as you probably know, by the way, guys, you guys on GoToWebinar, if you have any questions during the webinar, you're more than welcome to write me down. So you have a chat window. I'll do my best in order to try to answer your questions in between. And of course, I'm going to leave a minute or two at the end of the webinar for you to ask your questions. You ready to get to business? Okay. All right. So good evening, and let's talk markets. Okay. As you probably know, right now we're in the middle of the earnings season. Okay, the earnings season actually takes place 4 times a year, once a quarter, right? We have 4 quarters, 4 times a year, every once in 3 months. When all the companies in the United States of America, all the companies that have shares out there, all right, all these corporations are handing out the reports once a quarter. They must, since we as public, we have shares of the company, so they must hand out reports. And we as traders, if we know how to identify the reaction of the stock, the reaction of the market according to these reports, okay, it gives us a lot of trading opportunities. And all we need to know is how to recognize it, how to trade it, what we should look at when we look at the report, how can we trade the day after the report, and so on. So I'll try in just a few minutes today to give you some of the background to what I'm looking for when I'm trading on during the earnings season. The earnings season usually takes for like a month and a half. That at the beginning we have the financial sector, and we had it already, which means the banks, and then usually the technology stocks, and then the rest. Okay, so I want to take a look. I want to scan at what we had so far, what we're gonna have in the next few days, and what we're expecting at the nearly future. Just for you to know, on January, which is now, we have an annually report and a quarterly report since the beginning of the year. So pretty interesting. And let's start. Let's take a look. So earnings season trading. Earnings season entered its second week on Monday. Okay, we had the first one, second week on Monday. The US stock market is breaking record highs on a weekly basis. Okay, every week. I don't know if you noticed, if you look at the stock market indices, the Nasdaq, S&P 500, Dow Jones, all the leading stocks. Okay, everything right now is booming up. Actually, it's booming up for a whole year, but in the past month, in the past few weeks, for a reason. Okay, which the reason is the Trump's tax cut program, generating massive demand for US stocks. Okay, think about it. I don't know if you heard, but for the first time, Trump's tax reform went through the Congress, and right now, the Americans are supposed to pay less taxes, which means they have more money available. Okay, they can spend more, which means companies and businesses are making more money. More money available for the stock market. Okay, people are buying stocks. Huge corporations are buying stocks. Banks, investing houses. And you can see that the Dow Jones, S&P 500, Nasdaq are extremely bullish right now, which means they're going up. They're booming up, actually. Okay, Dow Jones is the index, the oldest index in the United States that represents the 30 corporations with the highest value. Okay, S&P 500, of course, is the 500 leading stocks with the highest value in the US market. And the Nasdaq, everybody knows, the Nasdaq includes the 100 technology stocks with the highest value in the United States. Okay, if we're going to the MetaTrader, let me show you. Let's go to the MetaTrader and take a look at the leading. Okay, for example, this is the Nasdaq. Everyone can see the Nasdaq. This is, let's put on a monthly chart. So each candle that you see here is 1 month. Okay, this is the beginning of, this is January 2017 when Trump became a president. Look at the US market. Okay, and look at this month. This is January 2018. Okay, the main reason for this huge green candle right now, the market is, it's never been so high. Okay, it breaks. The thing is, if you look at a weekly chart, you can see weekly, monthly, it doesn't really matter, that the US stock market is breaking. Okay, breaking. We have a new record every month, every week, every day. Okay, look at the daily chart today. Every day just breaks. We have new highs every day. And this month, this huge green candle, the reason for that actually is the tax reform of Donald Trump, which means less taxes, people have more money, more spending, and the US stock market is booming up. Take a look at, for example, the S&P 500 monthly chart. Okay, you'll see the same thing, and the Dow Jones, of course, is booming up as well. Okay, so the US stock market right now is in the best situation ever. And followed by that, we received some great reports, and we see a lot of increase in the value of the major stocks in the United States. Okay, this is the general picture. So the US market is breaking record highs on a weekly basis, as we said. Trump's tax cut program is generating massive demand for US stocks. We saw the green candles, and the main indices are extremely bullish. Here are a few examples of current movement on earnings. Okay, let's go. I showed you the bigger picture. Now let's go specific, and then I want to show you how you look when you look at a certain stock at a certain company. Okay, how you trade, how you can trade the day after. So major U.S. banks are rising since the start of earnings on January 12th. JP Morgan, Citibank, and Bank of America, Wells Fargo are trading higher. Because US banks, okay, there are two main reasons for that. Okay, first of all, of course, is the tax cut expectations. Okay, that we talked about. The second is US banks are enjoying higher earnings on higher rates. Okay, interest rates are going up, as you probably know. Right now, the interest rate in the United States is 1.5%, and it went up 3 times last year. We expect another 3 hikes in 2018, which is a big deal because interest rate was very low. It was on after the big crisis in 2008. Interest rate dropped all the way down to 0.25% and stayed the same for almost 8 or 9 years. And then it started to rise to 0.75, 1.25. Right now it's 1.5%. And we had 3 hikes for the first time after 11 years during 2017. And according to Janet Yellen, the chairwoman of the Fed, we expect another 3 hikes during 2018. And the situation of the stock market supports it strongly. So let's see what we're gonna have on 2018. Okay, Kathy is asking us, Kathy, with all these highs, are we heading for a crash, meteor? Will it continue? Okay. In general, in order to, first of all, it's a great question. Okay, in order for you to know whether it's going to continue going like this or not, okay, we have to pay attention first of all to the news. Okay, because we cannot predict the future, what will happen 1 month, 2 months, or 3 months from now. Okay, without knowing what really is going to happen on the ground. Okay, so we have to, first of all, we have to pay attention to the interest, to see if interest rate, if we're going to really have 3 hikes during 2018. Okay, we'll have to see if this tax reform and the expectations, if it's really taking place. And I think that the third and most important thing, the third thing, maybe you should take a look once a month, every first Friday, at the NFP, which will give you a mirror to the situation of unemployment, wage, and so on in the United States, and looking at the quarterly reports, which now are great. And right now, the situation, the economic situation in the United States looks never better. It was never better. So right now, it looks very bullish. What will happen in the future? We'll have to wait for the future. Just giving you the picture of what we have right now. So JP Morgan, Citibank, and Bank of America. Let's take a look. Let's go to the MetaTrader. Okay, welcome. Going to the MetaTrader, let's go to JP Morgan, just to show you. Okay, this is JP Morgan on a monthly chart. Okay, each candle represents 1 month. Okay, look, this is, we're talking about September, October, November, December, and this is January. Okay, I've never been so high, $114 per stock traded right now. Looking at the daily chart, okay, the report took place on January 12th. Okay, January 11, and then on January 12th, we had this gap up, and it's still climbing up. So it looks good. Think about it. Higher interest rate. Okay, if we have higher interest rate, it means that banks give out loans and they make more money out of their loans, right? Because if interest rate is high, and if I'm a bank, okay, someone's taking a loan, the payment is higher, which means I'm making more profit. Okay, interest rates are high, they pay less taxes. Banks, they pay tax as well. They pay less taxes, more income. Okay, so the financial system looks pretty good right now. I think except for the Goldman Sachs, because of their they took a few bad trades, but in general, take a look at Citibank, for example. Okay, you'll see the same thing. All right, monthly chart, bullish. Okay, going up just like the other banks, and Wells Fargo, J.P. Morgan, Citi, Goldman Sachs is kind of stuck right now, but still growing up in the past few months. Okay, they just had a not such a good report. Okay, so this is about the financial sector, and let's keep going. So we said U.S. banks enjoying higher earnings on higher rates and tax cut expectations. Now the average move by bank stocks following earnings is higher than 4%, as I showed you. Leverage trading on these stocks has become attractive throughout earnings. Now let me explain. You guys, you trade through us, through iTrader, you can use, of course, leverage. This is the whole idea of trading through iTrader, that you can use leverage, okay? As far as your account managers, but as far as I remember, you have leverage of 1 to 20, I think, on stocks, and 1 to 10 during the earnings season. So you can trade 10 times or 20 times more than your base capital in your account. Okay, which means, for example, just to give you an example, all right, if a stock goes up by 4%, which this is the average, okay, take 4%. If you trade 10 times more than your account, we're talking about 40% out of your account. So the best time to trade it is during the earnings season. Goldman Sachs, as I said, is the only major bank that has not risen on earnings so far. That is the reason traders are recommended to diversify their trading portfolio, and I want to talk about it in a few seconds. Every webinar I'm telling you, okay, that I think you should have a portfolio that you can that will be big enough in order for you to diversify it. Why? Because even if I analyze the market technically, fundamentally, it doesn't matter. All right, I don't want to put all the eggs in one basket. I always say that. All right, which means if I have 10, 15, 20 positions and 1 or 2 or 3 positions are going against me, for example, let's say I would trade during this earnings season, at the beginning of this earnings season, I would trade the banking system, right? The banking package. Okay, and just for an example, all right, I would go with stocks like JP Morgan, Citigroup, Wells Fargo, Goldman Sachs, or like 5 or 6 banks, all right? So most of them would go my way, which means it was a good trade. And Goldman Sachs had a report that was not as good as the others, okay? So maybe I didn't make such a profit, or maybe even lost on Goldman Sachs, but the rest of my portfolio went good. So this is one of the reasons why we want to split our risk and not put all the eggs in one basket when we trade stocks and any other assets in general. So keep it in mind. Oh, this was beautiful today. Netflix published its earning report after market close yesterday. Okay. Okay. One thing that I wanted to tell you: the if you go to our homepage on itrader.com, this is what I wanted to show you here. You have, okay, this is our homepage on itrader.com, right? If I'm going to news, under news, of course, first of all, you have the webinars here, so join me every week. If you go down here, you have the earnings season, all right? If I click on the earnings season, it gives me a calendar, okay, of the earnings season every quarter, which means you see JP Morgan on January 12th, January 16th, and so on. All right, so yesterday, where was it? What date is it? The 23rd and 22nd. We had Netflix. You see, Netflix on the 22nd after market. Now, these reports during the earnings season are published either before the U.S. market is open, okay, which means 2:30 GMT time, or after 9 p.m. GMT time when the market is closed. Never during trade, not to interrupt the trade. So these reports are published either before or after the market is closed. And the main reason for that is, as I said, not to interrupt the trade. Now, the idea is when these reports are published, okay, we're gonna see a lot of movement in the price of the stock, even though the stock market is closed. Let me explain. When the stock market is open, right, we can buy stocks, sell stocks. We have demand, supply. It's a market. Then when the market closes, okay, all the banks, investing house, all the big money, they're trading between themselves off market. They don't trade in the market, but they trade off market. Okay, think about it that you have, I don't know, you have a store and you sell tomatoes, okay, and you work in the market. So during the day, if you have more demand, the prices are going up. If you have more supply than clients, right, the prices are dropping. And then at the end of the day, the market is closed, okay, off market. And then someone calls you and asks for tons of tomatoes, right? It's going to affect the price of the tomato tomorrow when the market will be open. So the capital market, just like any other market, works exactly the same way, right? So you got to understand that during the earnings season, we see a lot of changes on pre-market prices because of these bank and investing houses when the market is closed. So JP Morgan, I'm saying, Netflix published a great report yesterday. Okay, let's take a look. We said Netflix published its earning report after market close yesterday. Netflix added more subscribers than expected. It was 8.3 million versus 6.3 million. The stock jumped by more than 8% after the publication. It was crazy. Correlation tactics with Disney stock could be attractive today, and let me explain. You know what Disney are doing? Disney are holding what we call cable TV, and Netflix is streaming TV, right? So these two stocks usually work in an opposite correlation, because if we have more subscribers going to streaming TV, it means that we have less users for cable TV, which is bad for Disney. Okay, so just like what happened today when Netflix went up, Disney went down. So you understand the opposite correlation between these stocks. So this is one thing that I wanted to explain. And to understand correlations in the market, just like gold versus main currencies, or the stock market versus currencies, okay, if we understand these correlations, it helps us a lot with the trading, because if the whole banking system works on interest rates, for example, and of course the tax reform and so on, if I have one report on one bank, probably, okay, I'll see the same effect on another bank. So these correlations are very important when you trade. Now the stock jumped. Okay, when you look at the report, okay, after the report is published, so you cannot trade. You can trade only the day after when the market is open. I want you to pay attention to three major things. Right? First thing, I want you to pay attention to the P&L. Profit loss. Did the company make profit, and how much, versus the forecast? Okay. Go to Google Finance. Read about it. Okay, usually these reports are somewhere between 90 to 120 pages. I don't want you to read all the pages. We want to take a look at the highlights. So three major things. All right, one of them is the P&L. Did they make profit or loss, and how much? Okay, how can you know? You can know it through the EPS. All right, there's you can find it on CNBC or any other website. It's been published. It's called the EPS. EPS stands for earning per share. Okay, so always have what is the estimated earning per share, and then on the report we get the actual number. Just like when you trade fundamental and you go on investing on whatever, for a Forex Factory or our website, right? You trade on the expectations. You trade on the difference between the actual number and the forecast, what the analysts believe that the number will be. Same thing with the EPS, okay? So this is the first thing. Check if the EPS is higher than expected or lower. Of course, higher than expected means we had a good report, and the opposite. This is one thing. The second thing, I call it new businesses. Okay, I like to see if the company has spread itself. For example, if Apple opened new iStores, if Facebook got into new whatever, if Netflix, okay, got into new countries, got regulation to get into new markets. Okay, and the third and most important thing, this is what I call the key number. The key number is changes between stocks. For example, if we look at Apple again, um, more than 70% out of Apple's income is selling iPhones, right? They have cloud services, music services, iPads, iPods, whatever, right? They have a lot of products that they sell, but in general, 70% out of Apple's income is selling iPhones. Now, I want to see what is the forecast for the quarterly report. Okay, how many iPhones we expected that will be sold, and then when we get the report, we know exactly how many iPhones Apple really sold this quarter. Okay, so this is the key number. Now the key number is for Netflix. We're talking about streaming TV. Back to Netflix. We're talking about new subscribers, right? So if we had 8.3 million and we expected 6.3, it's 2 million subscribers in this quarter more than expected. Okay, which is a lot. Okay, we're talking about huge increase, and the stock jumped more than 8% after the publication. Let me show you. Want to see it? Good. Let's go to the MetaTrader and look for Netflix. This is a daily chart of Netflix. This is yesterday, and it opened here today. You see this jump? Yesterday the closing price was $227 per stock. Now this is interesting. Look what happened. The day before the report, okay, a lot of people, a lot of big money, they really believe that Netflix is gonna have a good report, and we can see this green candle here. Okay, the green candle, the price of the stock went up, and then the market closed. And then on the pre-market, after the report, it went up by 8% all the way. The open price was here, $254 per stock. Okay, so we had a huge gap up. This is all times records when we talk about Netflix. You see, all times record, never been so high. And now the day after, okay, a lot of people ask me, okay, so I cannot trade, right, the report itself because I see the results only the day after. And then when the market is open, I can trade. What should I do? How do I know whether to sell or to buy the stock? So I want to check three major things, all right? One of them, the day after. One of them is, first of all, is technical analysis. Put resistance and support lines, okay, to check the highest and the lowest point. Here with Netflix, we didn't have a resistance because this is the highest price ever. So we don't have a resistance line, right? So this is the highest ever. So I go to the second, and I would say psychology. Now think about this. This whole market is based on human minds, right? Think about yourself. If you were holding Netflix stocks, it doesn't matter if you bought it the day before or a year before or a month before, right? Then there's such a good report. You wake up in the morning, the US market is open, and you made a lot of money. Okay, you see this huge gap up. Okay, here you made a lot of money, and then the market opens here. What would you do, guys? You're holding Netflix stock. There was a great report, and overnight, okay, your account looks great. When the US market opens at 2:30 p.m. GMT time, you earned a lot of money. What is the first thing that you do? Psychologically, think about it. Come on, guys, participate. Write me on the chat window. What would you do if you would buy a stock, secure my money, which means, right, guys, selling the stock. Why? Because everybody wants cash, right? So a lot of people, you see, sold the stock here. And then the value went down. See, this is exactly what happened. Now, if this is the second thing. So first one is resistance and support line. Second is psychology. And the third one is looking at the index. Go to the Nasdaq, go to the S&P 500, see it the same day, right? These are future contracts, so it's open 24/5. So you can always see what is the mood in the US market, whether the stock market is going up or down in general. And then it's going to help you to make a decision, all right, the day after. Good. Now we're making some progress here. Okay. And you want to see what happened with Disney? Netflix jumped up, so Disney probably went down today. See? Pretty easy by 1%. Okay? Good. Okay. Let's keep going. Now, other publications and correlations. Netflix is the first FANG stock to publish. Okay, FANG stands for Facebook, Amazon, Netflix, and Google. Some people even call it FAANG, including Apple. So these are the major technology stocks out there that we trade. Facebook, Amazon, and Google will publish in the coming weeks. Okay, if you want to see exactly the dates, you can go to our website. Let's check. You know what? Google. There you go. Google will publish on January 25th aftermarket. You can write it down. Okay, and then we have. Let's check. Anyone sees Amazon on February 1st, Apple on February 1st, and that's it. All right, so you have the dates. Great. Okay, so Facebook, Amazon, and Google will be published in the coming weeks. Netflix had a good report. We have high correlation between these huge technology stocks. You have to understand, if you take all this FANG, including Apple, okay, together, we're talking about a market cap of $3 trillion. Okay, this is like the whole economy of Germany in four US companies. Okay, so just for you to understand, we're talking about huge corporations. All right. Caterpillar is interesting. I just put it here because Caterpillar will publish this Thursday, and there's hurricanes and high. Okay, I don't know if you heard about the hurricanes thing going on in the U.S. right now in the West Coast, and we had some hurricanes in the past. Actually, the United States are suffering from a lot of hurricanes lately, unfortunately. So hurricanes and high commodity prices could support earnings, and let me explain. Caterpillar will publish this coming Thursday. Okay, now think about it. If we have expectations, okay, if you look at the weather and you see expectations for hurricanes, which means, you know what Caterpillar are doing, by the way? Anyone? I don't know if you know, so I'm just asking. Caterpillar are building or making heavy equipment for builders, like tractors and huge whatever. So, right, to build buildings and so on. So Caterpillar is the biggest American company that make heavy equipment for builders. For example, if you look at Caterpillar after the elections, this is kind of interesting. If you look at Caterpillar after the elections, you'll see that. Remember that Trump said on the night between November 8th to November 9th, when he was elected, he said, "I'm going to rebuild America," right? Infrastructures and so on. He talked about building the roads, and if you look at the stock itself, you'll see that. Let's go to 2016. It was 2016, November 8th to November 9th, which is here. You see this gap? The day is after the election because of rebuilding America, and then it jumps up. Okay, so the same thing might happen because of the hurricane expectations for Caterpillar, and we have the high commodity prices that could support earnings. Gold right now is traded very high. Oil right now is traded very high. Okay, in order to get these things out of the ground, the ounces and the oil and so on, we need heavy equipment. Who's making heavy equipment? Caterpillar. So it's all connected. You understand? It's all correlated one to the other. Okay, commodities. If commodities prices are high, okay, we expect the company that makes heavy equipment to go up. Still, we have on Thursday we have the report, so just giving you some details about it. A few things that I like to check on any company before. First is the P/E ratio per sector. I'm going to show you, and then we're going to talk about conservative versus volatile. And so, okay, if you go on Google Finance, for example, take a look. Let me try to explain something. I went on Google Finance. I wrote Apple. You see right now the market is open. The price is $179 per stock. Okay. Now, if you go here, you have the range, the open and the highest, the lowest and the highest prices of today. And then we have in 52 weeks and so on, the open price for today, the volume. Under market cap actually is how much the company worth. This is, just take a look at Apple. Apple worth more than $917 billion. Okay, when the price of the stock, by the way, will get to 195, it's going to be $1 trillion. This is the company with the highest market cap in the world. Now, why is this important? You see, market cap, actually, market cap is, how do you calculate market cap? The total value of a company in the stock market. It is generally calculated by multiplying the shares outstanding by the current share price, which means, as you can see, let's open a calculator. Let me try to show you something. Let me try. If you get it, it's great. Okay, take a look. Here is a calculator. Great. Now, Apple has 5 billion.13 stocks out there. You see, shares 5.13 billion. All right. If I take the number of shares and multiply it by the share price around 179, I should get the market cap 918 or 917 billion. It changes all the time because the market is open. But in general, you see, I got the market cap. Why? Because if I'm taking one share, right, one share, and multiplied by the number of the shares, I'm getting the whole puzzle, right? I'm getting the whole picture. All the pieces are together, and then I know how much Apple worth. Did you get it so far? Pretty easy, right? Number of shares versus the value of one share. I'm getting the value of the company. Okay. Now, if we take, you say the EPS is earning per share. Okay. Don't confuse, because on the reports you're gonna see a quarterly EPS. And what you see here is an annual EPS, which means this EPS is, as you can see, the net income over the last 4 quarters divided by the shares outstanding, which means EPS is earning per share. If I'm taking the whole income and divide it by the number of shares, I'm getting earning per share, right? Net income of Apple divided by 5.13 billion number of shares, I'm getting earning per share. This is per year. So we're talking about $9.19 per year, the EPS. Don't confuse with the quarterly ones, okay? When you look at the EPS quarterly during the earnings season of the reports, take a look on the quarterly expectation, the forecast, and the EPS on the report itself. Now, if I take this EPS, okay, earning per share, let's see how much money Apple made this year. So they made $9.19 per share, and they have 5.13, a bit more because we don't have all the numbers, billion shares. So they made more than 47 billion income revenue. This is the money that they made, all right? Good. Now, what we want to look at is the PE ratio, price to earning ratio. The share price divided by the earning per share. Why is this important? Okay, if I take the share price, 179, divided by the EPS, 9.19, I'm supposed to get a PE ratio, price to earnings, 19.4746. Good. Okay. This detail tells me if I take the earning per share and I want to see how many times I have 9.19 in the value, it actually means how many years will it take Apple to earn what it's worth. Okay, so Apple is going to take 19, almost 19 and a half years to make this 47 billion, I'm sorry, to make $917 billion. Right? Now, why is this all important? Because if you trade on technology stocks, okay, I want to look, it depends of who you are, okay, which means if I'm taking 2 companies with the same market cap, such as, for example, Amazon. Look at Amazon. Amazon worth $650 billion, and the P ratio is 341, which is really, really, really high. Okay, why? Because each percent that will move because of the price of the stock is a lot of money, right? 1% here is like $135. Now, if I'm taking Facebook, for example, for the same market cap, almost the same, like what is it, 600 something, 545 billion, but the P ratio is only 34, which means if I'm more of a conservative trader, which means I don't care not to make a lot of profit, but I don't want to take a lot of risk. I want to look for a company during the earnings season, okay, for a company that has a lower PE ratio for the same market cap. I'm taking two companies that have almost the same market cap. I would go for the lower PE ratio if I'm more conservative. If I'm more of a risk lover looking for volatility, I'm going to look for a higher PE ratio. Okay, bigger movement. 1% with Amazon is $135. 1% with Facebook is $18, almost $19. So you understand the difference, right? I hope it was helpful. Okay. So we have the PE ratio per sector, conservative versus volatile. We just talked about it. Stock and index, always check the index at the same day before the report, before the market is open. Okay, look at the future contracts of the Nasdaq, S&P 500, and Dow Jones, and try to understand what is the mood, general mood, and of course EPS numbers and specifics, the key numbers, and so on. And good luck. Are we good? Any questions? This is the time. Anything you would like me? You would like to ask, you would like me to clarify, I'm here for you. Meanwhile, telling you that I'm going to be here next Tuesday at the same time. Let me just show you how to register. All you have to do, go to news, click on webinars, or you can do it actually down here. Click on save me a seat, put in your first name, last name, and your email address. So we can contact you back. By the way, if you have any further questions, you're more than welcome to contact your account managers and ask whatever you need. If there is a robot trading for you, actually not with us. So we're here to give you all the tools in order to make you a professional independent trader, my friend. I'm here just to provide information and education. Okay? You are more than welcome. I wish you a great evening. Pay attention to the calendar of the earnings season. There's still a lot of all the major companies didn't publish the reports yet. So pay attention, trade smart, and thank you very much for participating. See you here next webinar. Thank you. Bye-bye.